Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. President Trump says he will speak with China's President Xi Jinping on Friday as negotiators reach a framework deal to keep TikTok running in the U.S.
Asian stocks are gaining after Wall Street hits fresh records ahead of a widely expected Fed rate cut. Chinese shares in focus following 12 days of buying from mainland investors.
Also ahead, how Jack Ma's return to Alibaba is boosting morale as the company fights fierce competition in e-commerce and in AI.
And I'm Stephen Engel at the Hong Kong Stock Exchange, where we're awaiting the trading debut of Hesai. That is the world's biggest LiDAR sensor maker. We're going to be speaking with the co-founder and CEO David Li coming up.
A good Tuesday morning to all of you. Thank you for joining us. Lots to get through as we get into this Tuesday session here. Lots of fundraising going on. We just got a pricing out of 10 cents and a dim sum bonds there. FWD, of course, is a separate conversation. Stevie, of course, is at the exchange for Hesai's debut here today. And why not? It is a good day to be tapping these markets for funds. As you can see, Asia Pacific is now up about 1/10%. That's pretty much at a record high there. Japan is coming online, reopening, and as you can see, playing some catch down. All that being said, the tide is really towards the upside. Taiwan is coming online 0.5% there, and of course within the chip space, it's a separate conversation, but we are already seeing the NVIDIA wobble, but then the recovery into the close. Momentum, as you can see, coming into the Asian session with some semis there towards the upside. Also, speaking of some upside, flip the page please if we can. Gold spot hitting a record high just a few minutes ago, 36.85 here, an ounce on spot gold. 10-year yield is now pushing to the 4% handle. In fact, the 10 and the 30-year yield are pushing towards the lower end of the recent ranges. That is ahead, of course, of the Fed conversation. We'll get to that in a moment, of course. In terms of the big moves we had overnight, certainly the familiar faces, familiar names that we've been tracking really for the course of the last, week and a half or so, like Baba, for example. We're now flirting with 160 there. And, of course, Hesai is the one that's listing here in Hong Kong, 4.3% ahead of the debut here in Hong Kong. Going into the open today, futures are doing this. We're also looking at, I think we have aluminum as well. Do we have that in there? No, we don't. I promise we'll get that in before as well. This massive rally we've seen in aluminum prices, 10-year yield 1.8%, and of course we're looking at a rally going into the session today. And why not?
Yeah, why not? When you have plenty of catalysts, you have good sort of sentiment coming through after, of course, U.S.-China trade talks. And yes, maybe this momentum continue when Xi and Trump actually start speaking on Friday as well. So there was some deliverables on TikTok. Certainly that means, when it comes to your agenda here today, that stock rally may have some also room for more of a leg higher here. I mentioned Hesai listing, of course, is the LiDAR maker here. We did know about that retail offer was about 168 times covered as well. Pop Mart, we'll talk about that pop in the rally there yesterday after that JPMorgan downgrade. We'll see if that continues for another day as well. Sectors like luxury, like gold, which we'll talk a little bit more about as well. The aluminum rally, as Dave had mentioned here, and we do have some jobs data out of Hong Kong later on this afternoon. But certainly there is a lot of kind of good news sort of things leading up to this, right? Whether it is what we heard from TikTok, still framework right now, but maybe that bodes well to what could come on this phone call on Friday, too.
Big deal is how President Trump framed what could happen there. It does seem that we've been talking about how a framework was already agreed on. I think I'm really waiting to see what the details look like and whether or not that phone call on Friday, which I believe is a phone call, of course, will eventually lead to an in-person meeting, which I guess would be the ultimate path here if we do get to that point. Certainly, it removes some of the premium that's been built into the market because of these trade conversations. Yeah. But again, it's a reminder what we've gotten this week, around chips and the potential complications there, that we are headed in the right direction, but it could not it probably won't be as straightforward as most people expect.
Yeah, especially for NVIDIA, right? When they're trying to supply its chips to China, it seems like China keeps trying to maybe make it a little bit more difficult for them. We'll see how the chip stocks are going to react domestically in China here today. But also, it brings up to a long discussion about what's going to happen in the Fed when you have the likes of Lisa Cook and Stephen Myron going to be attending this meeting in a few days.
Photo finish. We did get that vote, of course. Stephen Myron a couple of minutes ago, and of course, a court also ruled that Donald Trump cannot fire Lisa Cook ahead of that meeting as well. Not that it would be consequential, I guess, for the vote today, because that seems to be hammered in stone right now. It's the conversations around how much the Fed will push back and what the tone will be from the press briefing on the pricing in markets going into, I think, do we get a second or third cut? And I think I bring you back to the note from Stan Chart early this week, right? So they're saying 50. But that's it for now. They're not committed to anything beyond this meeting because it's hard to decipher what's ahead.
And that would be the trough for the dollar, I believe. Stephen Engler also mentioned as well. Right. But we're watching to see where is his dot going to be, Stephen Myron. If he calls for a 50 basis points
that's a good point.
Cut, is that going to be on the low side of things? So certainly maybe the markets haven't priced that in just yet, but we'll see. Certainly let's get to our top stories here with President Trump saying he will talk with Chinese leader Xi Jinping on Friday about what he calls a big deal. Now, he spoke after officials from both countries meeting in Spain reached a framework deal on keeping TikTok alive in the U.S.
It's important, and it can maybe even bring us closer to China.
Derek Wallbank, our senior editor, is with us right now. How hopeful should I be? Should markets be, Derek?
Well, David, I don't think that there was any real path on TikTok that was going to get this to, to anything other than kind of where we are right now, right? This has been a long, dragged out process of negotiation to try and figure out what the end result on TikTok is going to be. The devil's in the details, though, as you said. We're not quite sure what this is going to mean in terms of the algorithm, in terms of where things are basing, in terms of what the stakes are going to be, if China's going to have a remaining stake in there. There's a whole lot of details left to be worked out. But the simple fact of the matter is that we're here in September. There was legislation that said that that needed to be shut down in a certain amount of time if there wasn't a deal in place. That has been extended again and again and again. And so this was always sort of the way that we were going there. But certainly you're picking up on the positive gyrations there. Trump, though, saying that his big sort of focus is on a larger, sort of more consuming deal. And all of this is happening with this sort of backdrop here of Trump and Xi supposed to be meeting at some point. I say supposed to be is not yet nailed down. And so that all the conversation is about something maybe toward the end of October, early November, somewhere in that window when we're kind of in the middle of what I like to call summit season. The big one I have circled on my calendar right now is APEC in South Korea. Is a possibility that they could meet on the sidelines there in South Korea. If you're flying from the United States, South Korea, you go a little bit further on, you can get to Beijing not too far. And certainly there has been some thought that the Chinese might like to have that in Beijing. You could more tightly choreograph something there. There has been some talk about maybe you don't want to have a fully freewheeling kind of session with the American president. Certainly Vladimir Zelensky would attest to the perils of doing that. But a lot of these things sort of remain to be seen. And Trump's making it really clear as we talk about TikTok or NVIDIA or anything else, there's a big deal to be had here between the U.S. and China, and he wants that big deal.
Okay. That grand bargain everyone's been talking about earlier this year, Derek. But what about what happened with NVIDIA, with regulators in China saying that the company actually violated anti-monopoly laws over this deal that they did when it came to Mellanox Technologies? Does this actually further muddy the waters for NVIDIA, waiting to really come back to this market now?
Well, Yvonne, I think it's a complication, right? And you saw that initially with the stock price when the news of this came out. You see a little bit of a bump down on that, but you also see a little bit of a recovery since then. And so I think that there's a kind of market expectation right now. There's sort of like, okay, let's throw this into the mix. Let's see what happens here, but not necessarily reading this as the world's worst situation right at the moment. Obviously, NVIDIA is saying, they comply with all applicable rules and et cetera, et cetera. But no, I mean, I think this and TikTok and all of those things, you sort of put all of these things into the hot pot, as it were. You stir it around a little bit. It's a bit of a spicy concoction, and what comes out eventually, that's really the key thing. So it's not necessarily a huge surprise to me at this moment that more things are getting put into the pot. I think the real question is, as long as you're on this trajectory, where do you necessarily wind up? Do you wind up in a position where Trump and Xi are talking in the next month or two in person physically? These phone conversations that we've had have been very, very wide ranging. They have gone over a lot of topics, and they've tended to be marathon affairs. So whatever readouts we're getting on Friday, that's going to be a really, I think, big indication, and that could come on a number of different fronts. I think everybody kind of has to stay at the ready.
All right, Derek, we will be ready. Derek Wolfing there joining us out of San Fran. We'll be speaking with Anna Ashton as well from Ashton Analytics in the next hour about how she's assessing the Madrid talks and if it heralds a thawing of ties between the U.S. and China as well. In the meantime, we have some news on Colombia too, Dave.
Yeah, lots of news right now on the foreign policy front. So the U.S. has now decertified Colombia as an ally in its war against drugs here. And what effectively that means is that you'll have a reduction, or eventually it could lead to a reduction in assistance from the U.S. as it pertains to that specific battle. It could also mean things like visa restrictions, for example, on government officials, and perhaps maybe sanctions could all follow. But of course, this is a changing of the page and reclassifying Colombia. No longer an ally in that drug fight. Yvonne.
All right, another top story we've been following here. It's been fast moving the last few hours, really, is that U.S. appeals court has blocked President Trump from removing Fed Governor Lisa Cook from her post, while her lawsuit challenges the dismissal procedure. Now, that decision came as the Senate voted to confirm the president's economic advisor, Stephen Myron, to join the central bank board.
Yeah, that means that both governors could be involved in the crucial FOMC meeting that begins, of course, later on Tuesday in the United States. Christopher Condon, of course, who leads our Fed Reserve team, joins us right now out of Washington. Why don't we start with Lisa Cook? So she's going to be included likely in this upcoming meeting. Does that have any material consequence as it pertains to Fed policy and the path of Fed policy?
For this meeting, David, it really does not have any bearing. Neither does the news that Stephen Myron has been confirmed in time. We fully expect him to participate in the meeting as well. In terms of tomorrow, the Wednesday rate decision, no, this is not going to change anything. In any case, the broader Federal Open Market Committee looks poised to cut rates by 1/4 percentage point. That is very widely expected among investors. It's expected among economists that we have surveyed. So that's a deeply embedded expectation. I suppose there is some very minor possibility that the Fed could cut by 50, but that's not going to happen suddenly because, say, Stephen Myron is there. It would happen because enough of the officials believe the labor market is deteriorating rapidly, but we really don't see that in the data. So the answer to your question in the short run is it doesn't have much of an effect. But of course, each of these bits of news are very consequential as we look ahead at monetary policy and as we look ahead for the prospects of Fed independence over the next several months.
And at this point, we're still not sure how long Myron could actually stay in this position, right? I mean, he said he's going to take a leave of absence from the White House, but how long could he stay in the Fed?
Well, this is a kind of complicated question, and there are 3 different scenarios here. Number one, he could be re-nominated and confirmed to a new 14-year term that would begin on February 1 of 2026. That's option one. Option number 2 is President Trump decides he's just there for a temporary period, and he chooses someone else to fill that seat for that full 14-year term. Option number 3 is that Trump does nothing. And in that case, Stephen Myron is fully entitled to stay on as a Fed governor, so long as no one else is confirmed into that seat. So he could be there on quite an indefinite basis, let's say. And that is quite an interesting possibility when you consider also that he's retaining his job, albeit on unpaid leave, but he's retaining his job as chair of the Council of Economic Advisors. If he wants to return to that, has been speculated already by members of Congress on the Democratic side that he'll have to act in a way that doesn't offend his boss, Donald Trump.
Yeah.
And that, again, raises questions about the independence of the people involved in monetary policy at the Fed.
Chris Condon, thank you so much, sir. Of course, he leads our Fed Reserve coverage out of Washington today, just giving us a preview of not just policy, but certainly the chess pieces involved there and all the complications between those chess pieces on that board right now. Lots to consider, of course, as you look ahead to the Fed decision and beyond. Right, just ahead here in shows, we'll be speaking, and we mentioned this at the top of the show, of course, this trading debut here in Hong Kong. Founder and CEO of LiDAR maker Hesai Technology. The company, of course, makes its debut here in Hong Kong. IPO priced at $212.80. It's probably going to be different in about 14 minutes or so. Counting down to the open of trade here. Hong Kong, Shanghai, and Shenzhen. This is the China Show. Cheese, but I love it. Okay, we're looking at some positive momentum going into the session today. 180 right now, the 10-year yield. Dollar China, we just got the fix, non-eventful, below 712. I mean, the market's done well, right? Where do we go from here? Let's get a sense right now from Jessica Tia, EM and APAC Equity Investment Specialist at JPMorgan Asset Management, here with us, of course, on set in Hong Kong. Good morning, nice to see you.
Good morning. Nice to see you both as
You're
well.
probably getting a lot of questions on this Chinese market rally. A lot?
We do, a lot.
What's the most common you get? What's the answer?
I think probably the biggest question is whether the rally that we're seeing this year, is it sustainable or something like short-lived, and then are we going to go back to those very difficult and tough periods? Well, there are reasons to be quite optimistic. Obviously, we're trying to be also very selective in any sectors, stocks that we're picking. But the good thing is that even if there are some pockets of the market which may look stretched, we definitely see a number of positive supporting factors. The first is definitely the easing U.S.-China trade tensions. I mean, I guess this morning's news about TikTok is definitely adding to this positive. Second is about the tech rally, which fared quite well. The third is about the involution campaign, so really those supply side reforms led by the government. That one in particular really aims to curb the intensity of this high competition, but also to curb all the over capacity issues. So that's definitely positive. And fourth is really about the improvement in shareholders' returns.
Yeah.
So I think so all these factors definitely play out very positively. And what we're seeing also is that more and more investors are taking steps in potentially looking for diversifying outside of the U.S. So beyond the U.S., looking at other opportunities, especially related to the tech innovation. And I think China is quite well placed.
The positioning already in this market seems quite bullish.
Yeah.
I mean, if we're talking already 12% gains for the CSI 300 in the last few weeks, how much more upside do you think we could see, though?
That's a good question, but we're really coming from far. And when you look at the valuations of the Chinese equity markets, it's trading at a discount compared to many, many developed markets. I think if you look at even the whole Asian markets, it's definitely one of at the bottom. So despite this rally, I think there's more upside to come. Obviously, I mean, how much upside, to which magnitude, this remains to be seen. But at least all the tech innovation and also any green shoots recovery in the property definitely helps in that direction.
Speaking of valuations, you've said the price-to-book ratio for China remains reasonable. Why are you using price-to-book? Just out of curiosity.
Yeah. So I think there are different metrics to look at, PE, PB. Actually, when we look also at the PE over the 20 years of a historical average, we're definitely on par. For the PB, it's quite obvious that we're still looking at a very attractive valuation compared to the historical average. So not just against the other markets, emerging markets or developed markets, but also against our own historical, the own market historical average.
Okay, so what pockets do you think valuations are still looking okay? What parts look a little bit too expensive now in this market?
Yeah, indeed, we have to be quite vigilant because there are some pockets that look stretched, as I mentioned earlier. So especially if you look at the technology sectors, we have to be very selective here. Looking at the Chinese upstream companies for semis, they look. They have performed very well, but valuation is also very high, and we do have some concerns about the sustainability of the economics, whether or not the demand will continue or not, whether they are going to reach their production goals, we don't know. But one thing that we like, if we stay in the semi space, especially the Chinese semi space, it's really the semi-production equipment tool makers. They're very interesting because usually these companies are very customer agnostic. So regardless of whether those Chinese semis will perform well or not, end up as emerging leaders or not, they will probably continue to do well.
Yeah, so they're apolitical place, let's put it that way, right? Okay, outside of China, you look at the rest of the region, and everything has done well. Yeah. So what now?
Yeah. There are a couple of factors that explain also this momentum within Asia. Weaker USD, US dollar, as well as more favorable potential lower rates. This historically has benefited a lot Asian equities. But what is even more interesting these past few years, especially this year, is the value up program. We have heard a lot about the value up program in Japan, and it looks like now it's inspiring the rest of the region. Korea as well have done quite well, and I think this is also one of the reasons why we have seen such major rally in the Korean equities since the beginning of this year. And then also interestingly, I would like to mention Singapore, because we're still at the infancy stage, but there are a lot of equity market reforms. I think the EQDP, so the Equity Development Program initiated by the regulator MAS, is very telling because it really aims at revitalizing the Singaporean equity markets. And so ultimately, those value-up program helps will help boost the equity markets, like what we have seen in Japan and Korea. So that could be also an interesting topic. Yeah.
Okay, out of all those, we've talked about everything that's at records. Yeah. What hasn't been, and is probably on the opposite side of that spectrum, is India. Yeah. Which has seen a bit of a consolidation given tariffs and the like. What's next for India?
Yeah. So for India, we see definitely more expansionary, fiscal policy, which is definitely boding well for India. Valuation has always been one of the major concerns. Is it too high? Are we going to see any correction or not? But that said, when we look at the macro side, we think that things are also getting better. You look at the inflation, it's fairly stable. And we try really to look at the companies that are seeing some turnaround or that are not overly priced, but offering very strong earnings visibility. So especially in the IT services, in the financial space, there are definitely opportunities to be found.
All right, Jessica. Thank you, Jessica Tia, there, EM and APAC Equities Investment Specialist at JPMorgan Asset Management. Your pre-market is up and running, and we are seeing the Hang Seng continue to extend those gains here today. As we mentioned, about 12 days of net buying here when it comes to some of these southbound flows. That's certainly one thing we're tracking very closely here. We talked about Hesai, that listing debut here today as well. And we're seeing HS Tech seem to be continuing here. We'll see how Alibaba fares as well. But yes, Tencent, we did get that bond pricing and that convertible bond. So certainly that's certainly one thing that we're seeing with the stock here today as well. A little bit upside there, too. Yeah, so they did price, of course, they're 5, 10, and 30. These are dim sum bonds, of course. So when you look at the spreads, of course, the comparable there would be the same currency ones. Suffice to say, we're also looking at the chip space going into today, of course, and the wobble and then the recovery that we got in the NVIDIA story that's lifting, of course, a lot of names across the region. And as you can see, not playing out to some extent here in the Hong Kong session. Right, now, the big listing here today, Hesai, LiDAR in the U.S., up 4%, I think, overnight going into the session today. And the offering price was at $212. We're now trading about 8% above that price. On the left side of your screens, of course, is the ceremony, of
course, at the Hong Kong Exchange, of course, where our man on the ground, Stephen Engel, of course, will be standing by to speak with someone on the stage. You can just do an eeny, meeny, miny, mo, who that will be. It's going to be the founder, of course. David Li will be joining the show very, very shortly following the banging of that proverbial or literal gong on the stage. Okay, they're making their way off the stage. That means we have a couple of minutes break before the opening bell going into the session today. And yeah, 26,000 is in play, 26.5 right now on the Hang Seng Index. It's a good day to be raising money in this market. It's a good day to be making money in this market. The opening bell is just ahead. You're watching The China Show. Good morning. Welcome back to The China Show. Another day, another new high, another listing here in this market. Let's toss it over straight now to Stephen Engel, our Chief North Asia correspondent, standing by at the Hong Kong Exchange with the one for today. Steve.
Yeah, we're just half a minute away from the banging of the gong and the trading debut here in Hong Kong for Hesai Group, which is that big world-beating LiDAR sensor maker, the biggest, no doubt, in China, but the biggest in the world as well. And David Li is there on the stage. He's about to bang the gong and get this secondary listing. They're already listed on the NASDAQ. We'll allow the group here in the room at the Hong Kong Stock Exchange to count it down. And we're going to allow David Li to bask in the adulation before he's going to be walked over here. We're going to get him seated and sorted for an interview here on the trading debut. As I said, they're already listed back in 2023 on the NASDAQ. They are doing the secondary listing here, and he's about to come over and join us for an interview. Back to you guys for now.
Yeah, well, we'll come back to you soon, Steve, but certainly one of the few and sort of homecomings that we've seen from some of these U.S.-listed Chinese companies. So certainly a lot to talk to David Li about there, but a pretty good debut there for the company. In terms of onshore markets, yeah, it's a good day to list. It's a good day to be long these markets once again. You take a look at the CSI 300, right? So good news came through from Madrid. Looks like we have some framework when it comes to a deal on TikTok as well. And now we're hearing that Presidents Trump and Xi are going to be speaking on Friday. So that, at least on the trade front, looking more positive here. So we are seeing, looks like a little bit more of that rotation back into equities away from bonds here this morning. We're focusing on aluminum, for example, as Dave mentioned, that rally as well. CATL, there you go. After what JPMorgan said, talking about all this demand about energy storage and the like, those shares continue for another day. We're up about 0.4% on this whole market chatter. Is this company going to have to raise their capacity for 2026 in their guidance, just given the demand that they're seeing when it comes to EV batteries and the like? So that's a big thing for the market. But there you go. As I speak, it's heading to downside there right now. Capricorn, though, that's a big one. We're up close to 3%. On the NVIDIA news potentially here, so what we heard from the Chinese regulators was that they did violate some sort of anti-monopoly law when it came to one company that they did take over as well. So does this add more, I guess, a boost to some of these local homegrown giants as well, or the little NVIDIAs, as they call Capricorn? Move to the board, talk about Hong Kong just a little bit as well, given that we have, of course, Hesai Group that's listed here today. Alibaba, that continues to be a great story here that we'll have a little bit more about, right? The comeback of Jack Ma and the company there. We're flat when it comes to the stock. We're at 154 levels here right now. Tencent, of course, with that bond sale. We're just getting some more news in terms of the pricing of that dim sum bond. But there you go. Hang Seng is up 0.4%. We've already seen 12 straight days of net buying when it comes to mainland investors there. So it seems like we could be seeing another day of this as well. Pretty steady on your offshore rate here. We're at 711, just sub 712 levels here right now. And we're focusing on a little more on the chips, right? So we talked about the NVIDIA story. SMIC getting a boost from Goldman. So they just upgraded the price targets and the earnings estimates for, I believe, 2028 fiscal year. So they're talking about high revenues and gross margins to come. They've upgraded the stock to price target 73. 0.1 Hong Kong dollars there. They're talking about the demand from local fabless customers is strong. That's the reason why they're seeing that here. But we are seeing, when it comes to some of these local names, continuing for another day as well. And we talk about what happened yesterday, right? So the Pop Mart story, all it took was JPMorgan to downgrade the stock, and we basically saw, I think it was like about $13 billion of market cap wiped out since it reached that record just a few weeks ago. Pop Mart, there you go, recovering a little bit as well. But CATL, we're seeing a little bit of a different story for the two stocks listed here.
Yeah, 13 billion. Yeah, Yvonne's correct there on the value that was wiped out of Pop Mart. And of course, as Yvonne was also pointing out, that the Goldman price target now for SMIC 8 shares raised to 73.1 from 63.7, and the A shares raised there to 161.1 from 160. We're looking at shares of Hesai right now. We're session highs, best day on record. There we go. On the stock price today. Well, best day on record in Hong Kong. I have to qualify that. It has been listed in New York. It's soaring in the debut today. 212, of course, was the offering price. We're trading, of course, well above that price currently, 13%. What did they do about that money? What are their plans as far as production capacity is concerned outside of the current production hubs? Conversations around Southeast Asia, perhaps. In fact, last time that David Li joined us in shows a couple of weeks back, we asked about Hong Kong listing, and he couldn't commit, of course, at that point in time. He simply said Hong Kong had really good food. We asked him about the Southeast Asia factory. He said, it's a place in Southeast Asia that has good food. Anyway, on that very note,
we can talk about it now.
Yeah, we can talk about it now, exactly. He's here in town with a listing today. In fact, Stephen Angle is standing by with the guy himself at the Hong Kong Exchange. Steve.
Yes, the man who just walked off the stage after banging the gong, and the trading debut of Hesai here in Hong Kong, David Li, the co-founder and CEO. Thanks so much.
Thank you for having me.
Congratulations for the second listing. Obviously, you listed in the U.S. in 2023. So the big question is now what? You've raised about $500 million, about 500 million, oversubscribed listing. Where are your priorities?
My priority has always been getting this product to as many people as we would like to, which is essentially 100% of the vehicles. If you think about what we try to do is we try to build the safety device for the cars. Yeah. It's like the future of the invisible airbag and seatbelt. Right. Historically, the problem is cost. We used to sell for $50,000. With the help of the proprietary technologies and the manufacturing, we're bringing it to $200. And we're trying to bring that to everyone.
Yeah, in June, when we met at the World Economic Forum in Tianjin, you were saying you've been able to bring down that cost base on LiDAR sensors by 99.5%. And
increasing.
Now, the industry in China, the EV industry, there's this anti-involution campaign because there's been a race to the bottom. So you claim to have pretty healthy gross margins, but clearly this price war in the EV space is driving down profitability for car makers. How is it impacting you?
The key is innovation, right? The wrong way to do that is to continue to lower your price without the ability to lower your cost. So for us, we've been trying to develop proprietary components since almost the very beginning. Since 2017, we've developed 4 generations of platform technologies on integrated components with one goal, which is to continue to lower the cost. That's why even though the price war it continues, even though everybody is fighting very competitively, we have an edge, not because we can afford to lose more money, it's because we invested so much already up front in being able to lower the cost down the road.
How confident are you, though, that the officials and the regulators, MIIT and others, can stop this race to the bottom and that a healthier auto industry will emerge? There might be a shakeout. Some of these main players that you have 100% contracts with, like Li Auto and others, there might be some consolidation. What's your outlook, and how does that directly impact you?
I feel like what the government is trying to do isn't stopping the race, is trying to hold a standard for the industry so that everybody can compete fairly without sacrificing safety, which is super important for us. If you think about it again, we make safety parts. We want to make sure everybody has the same set of metrics to evaluate their safety, which is now happening with the new draft of the GB. The government is essentially saying that, look, it's a bad idea when everyone just can claim they're level 2. Why don't we set a few scenarios then you really have to pass those scenarios to claim level 2 ADAS, which is extremely helpful to hold the bar high. And for us, it's further important because those scenarios cover many, many cases that require LiDAR to be safe enough.
So how much of these proceeds are going to go into the R&D to get to your latest, AT128 version chip for level 3 autonomy by next year?
A significant part is going to the R&D, and we'll continue to invest. It's not going to be 1 year, but we raise money to be able to continue to invest in the innovation, in the integrated components, in the in-house manufacturing, in expanding our manufacturing to outside China to serve our customers overseas. So in the end, with one goal is to bring that to everyone, including everyone outside China.
Overseas is critical, right? Because you have a Toyota partnership, you have a major partnership with an unnamed OEM in Europe. You have a factory being built right now in Southeast Asia. Everyone's excited here in the Hong Kong Stock Exchange. You haven't named that country. It's widely believed to be Malaysia, but we won't go down that road again. But how important is that international market? Because there's another announcement, a $40 million partnership with an unnamed, again, you're kind of secretive, unnamed robo-taxi company in the United States.
Customers always like to be secretive until they actually roll out to the full fleet or the vehicle. So we respect the culture, and we obviously follow our agreement by not announcing their actual name. But that's not important. What's important is that we're seeing the almost like explosion of adaptation for such a technology. China, of course, is first, and the rest of the world. Robotaxi, from the very beginning, now finally we're seeing sizable fleet with robotaxi on the road.
Can you make inroads in the United States? Because this partnership in the United States is with a U.S. robotaxi company. I'm betting a lot of money that it's not Tesla, because they're the vision. They don't like LiDAR. Elon Musk doesn't like LiDAR. But again, Waymo and others do.
Yeah. I won't be able to comment on the name, but I do want to point out even Waymo, which is one of the almost most advanced player in this domain, argued publicly that LiDAR is absolutely necessary. It gives you a great margin of safety, and it doesn't make sense for people not to consider that. Historically, it might, because it's too expensive, and we don't have enough data to know whether it's useful or not. Let me give you one example. It's almost like somebody will tell you, I don't think coffee helps me because I never drink coffee, regardless what other people think of coffee. Right? Now, everyone likes coffee.
Well, how much are you going to invest in robotics as well? That's the next hot one, because you have a PhD from University of Illinois in robotics. So humanoid robotics, embodied AI or physical AI, is that going to be the next race to the bottom? Because there's going to be, McKinsey told me that there's going to be a lot of investment in this, but there's going to be a drive down in the profitability and the price point.
The word racing to the bottom seems negative. I see it in a positive way. It's only going to be a technology that helps everyone if you can make them affordable enough. Can you imagine your airbag would retail for $10,000 each? Then it wouldn't be a meaningful technology. So racing to the bottom on the cost, but racing to the peak on the volume. That's the responsibility of any safety technology, and that's what we're about. And back to your robotics question, we obviously spend the major of our R&D on the automotive side, but it's actually fully leveraged from what we developed as a platform technology from automotive to robotics. You might think they look very different, but if you open it up under the hood, it's the same platform technology we developed. And that's why we're able to cater to so many robotics technologies with essentially the same product.
Tesla is obviously a leader as well in the development of those humanoid robots. Is China going to be the leader there like they are in EVs?
I think China will definitely be at least one of the two most important players in the world.
That's obvious.
Exactly. Well, the United States has a lot of great AI technologies, and a lot of people are trying to learn how to do manufacturing. I would argue we do have certain advantages, but in the end, it's who has the best combination of software and hardware. It couldn't be just one side.
David Li, thanks so much. Congratulations.
Thank you so much.
We'll be keeping track of the progress of your company. All right. Definitely. Yvonne, going to send it back to you live here with the CEO and co-founder of Hesai from the Hong Kong Stock Exchange. Yvonne?
Great conversation there, Steve. Thank you, of course. And our thanks to David Li, Hesai Group, co-founder and CEO at the Hong Kong Stock Exchange. Well, coming up, Jack Ma returns in a bid to make Alibaba great again. And sources say he's more involved than ever. Details of our scoop coming up next. This is Bloomberg. All right, we're talking MAGA right now, but we're talking about make Alibaba great again. That certainly is the mantra. And what we're seeing and what we're hearing, according to our reporting from Bloomberg, that Jack Ma is back on Alibaba's campuses and is more directly involved in the company than he has been in half a decade. Now, Ma, of course, as you may know, was once China's wealthiest and most prominent tech leader, and his comeback has been long awaited. And that, of course, that handshake, people remember, with President Xi back in February was seen as his official return to grace. It was also a signal that the country's tech sector, private sector, may be back in favor in Beijing as well. But, he always has been, Dave, the face, the personality behind this company. And really, the company without him for the last few years has struggled in some ways, you could say. And we certainly have seen that reflective in the stock price.
I mean, certainly. And, there have been not just, of course, on the Jack Ma side of things. There's been this whole regulatory regime shift and shift back that's really led to that. And I think using Alibaba just as a juxtaposition of, the changing stories is a really useful exercise to just figure out right now what it actually means, not just for the company, but for the sector moving forward. In fact, when you look at this chart, we put it actually on the chart. We're not taking the chart all the way back to 2014, of course, when it listed first in the U.S., and I remember that day like it was yesterday. Very big deal, of course, in that listing right now. But I also remember almost like it was yesterday, the conversations around how massive that ad deal was going into what eventually was a pulling of that listing, the whole common prosperity conversation, that return, of course, in pictures of Jack Ma, and, of course, eventually what then led to Chinese president meeting Jack Ma, and of course that big meeting that took place following the DeepSeek moment early this year, which did include, of course, Jack Ma there in Beijing. And it also brings to mind, and here's a useful statistic in case some of our viewers missed that, right? Alibaba was back then the biggest stock on the Hang Seng, is right now, again, the biggest stock, heaviest weighted stock to be more specific, on the Hang Seng Index. I just had to look at my terminal right now. At the peak, I think it was October 17, 2017, or October 27, 2017. At one point, Alibaba was valued at $860-ish billion US dollars. It was sixth in the world as far as market cap. Right now, it's about 360, and it's ranked about 30. So it's come back, but certainly there's a long way back to the very top.
Yes.
But, who would have thought we'd be here talking about this very story at this point in time?
Yeah, we're still, I think, not quite even halfway there from the peak, right, of those glory days. But certainly, it's a fantastic piece that brought to you by, of course, our tech team. I want to bring in Luz Ding now. She joins us now with more. So tell us a bit more. I mean, it's a great story. Why do you think Jack Ma is back, and at what capacity?
Yeah, thanks for having me. So what we have been hearing from employees at Alibaba and some other sources that Jack has been more involved in the company, the most involved since 2020. And he's been showing up on campuses. He's also getting behind a lot of big decisions in Alibaba, like recently the big investment of 50 billion yuan of subsidies into food delivery. And of course, he cares a lot about AI. He gets daily updates. And in one case, Reuters told us that he was messaging a senior manager 3 times a day, and that's a lot of watching. And then, of course, he does not have a official title in the company, from what we heard. But yeah, he's around.
Well, how much of the stock price rally can be credited to Jack Ma being back?
Yeah, I think so. A lot when we talk to people, a lot of the one word that came a lot is the morale. And he's still the moral leader. He comes back, and that means that some of the worst days that you two described earlier has passed. And then the company is steady shipped, and then a lot of confidence being brought to the company, and that means a lot. And of course, when we talk about like Alibaba's growth right now, a major driver is AI. And then that's when Alibaba, years ago, Jack Ma supported the venture. And then when the cloud business was in a lot of doubts, Jack supported it. And then, and look at now, it's the most promising growth engine of the company, rather than a lot of Alibaba's competitors, JD and Meituan, deep into the food delivery war.
Yeah, I think one of the people he talked to said, when there was a news that he was going to be making a speech on campus, they were getting very emotional, right? Just the idea of it. So what do we do at this point? Is he going to make an official comeback at some point?
We don't know that, and then he's been keeping relatively much lower profile. He was one of the most like visible leader, business leader from China. He goes to Davos and all that, and we have not seen that yet. And he's been showing up more on campus, and then he's giving speeches, but it's mostly internally. Besides that, he's been biking by the West Lake in Hangzhou.
Yeah.
Other than that, it's mostly internal.
Okay.
Yeah.
Still keeping low profile for now.
Didn't he dress up as Michael Jackson once?
Yes.
Right?
Yes.
Those annual shows.
Alibaba Day, right? Jack Michael Jackson.
Yeah. And there was some African talent show, or some show that he was also on recently as well.
Lots to look forward to.
Great reporting, and thank you for bringing that story to us here. Louis Ding there, joining us from our tech team. If you are a subscriber, you want to rewatch that interview, of course, and check out that story. And via our interactive TV function, TV Go, you can also become part of the conversation. You can send us instant messages. Check it out at TV Go. Plenty more ahead. This is Bloomberg. All right, some top stories that we're following for you today. Tencent has begun marketing its first bond sale in 4 years. The firm is said to be looking to sell 5, 10, and 30-year offshore yuan-denominated notes with initial price guidance at 2.6%, 3%, and 3.6% areas. Now, a source says the deal could be priced as early as today. This would be Tencent's first sale of dim sum notes and its first bond offering in any currency since April 2021. Elon Musk has responded to his massive pay proposal from Tesla's board by buying about $1 billion in shares, setting the stock into positive territory for the year. He made the purchase through a revocable trust on September 12th, signaling confidence in Tesla's future. Musk's trillion-dollar compensation plan includes an incentive if the company hits a $400 billion adjusted earnings target by 2035. Alphabet has joined an elite group of companies valued at more than $3 trillion, and the stock's rise is being fueled by a long-awaited antitrust ruling and second quarter earnings showing AI demand lifting sales. The Google parent joins NVIDIA, Microsoft, and Apple as the only publicly traded stocks above that $3 trillion level.
Yeah, that's pretty wacky, actually. In fact, just 2 or 3 of those combined is larger, actually, in aggregate compared to the entire Hong Kong stock market. But yeah, that's a separate conversation for another day. Well, speaking of chips, not quite there, but certainly have come a long way as a cohort here. SMIC, Hua Hong Semi, really on the back of the NVIDIA bounce back overnight. And we're also looking at some other things as well going into the first 25 minutes of trade. Just keep in mind, of course, it's 12 days of inflows. So far, it should be 13. Last we checked, so we'll see whether or not that goes into some of the big favorites right now. 0.3% to the upside, and we're now trading at 26,500 on the Hang Seng Index. 10-year yield right now. And you know what? We're going to have a conversation coming up on fixed income. So, one thing we want to note is, of course, the prospect of bond purchases yet again on CGBs. Gordon Tsui joins us, and of course, on the trade conversation, Anna Ashton out of Ashton Analytics.
Welcome back to the China Show. Here's a look at the HSI half hour into the session here, and we are off some of the initial highs, but we're still talking about a fifth of 1% to the upside here today. 8 shares are also doing around the same sort of measure here. It's going to be interesting, right? The taking stock here today is that, we might see a little bit more of, leaning towards the 8 share market. Maybe there's signs of a comeback that could be brewing coming through this market now.
Yeah, and I think when you look at the valuation gap, certainly is indicative of that.
Yeah.
Certainly when you look at flows recently, when you look at when you pull foreign investors, right, and if they had to come up with 5 stocks, that they had Chinese stocks that they would first top of mind for them, you'd easily find Tencent and Alibaba, and these names, of course, would
the
be
AI trades, basically.
Yeah, would be the first options there. And yeah, I mean, certainly from that said, from a valuation perspective, that does seem to be, of course, where the value trade is, and not to mention as well, the value trade are growth stocks, which I guess is indicative right now of the trend. Now, all that being said, it's also a market that's come alive, and one of the iterations of that is this big listing today, this debut today of Hesai, which debuted at, it priced at 12.12 and change, and as you can see, we're now better for about 10%. And this is just the latest one of many, many companies that have hit both the equity markets, whether that's convertibles or whether that's, pure credit, on the dim sum bond side with the Tencent listing and FWD. Yeah. So, I mean, take your pick, really, where you want to raise your money these days.
Our ECM team is probably pretty busy dealing with all the news.
They said no to coming on shows today, so.
But yeah, basically, I mean, also, this is one of the first of several U.S.-listed Chinese companies that are going public in Hong Kong this year. So they want their ability to keep raising funds. Of course, there's been a lot of the delisting fears in the U.S. as well that have emerged. So certainly that is going to be one thing. But yeah, they are, of course, very much a part of the whole car maker EV sort of supply chain. So certainly a big sort of a theme there in this market.
Yeah. Okay. Now, I posited this on X/Twitter the other day and got a lot of pushback. But I guess that was the point of, I mean, if you put nothing consequential out there, then you're just wasting space in the cloud. So I basically said, with equity markets at these levels, it's scary that there are no visible risks out there. I mean, yes, there are risks that we see.
Yeah.
But when you look at the markets, when you look at the VIX, for example, it's holding below 15. You look at the VIX of the VIX, which is trading at about normal. It doesn't seem like the market is attaching a high probability of any of these material risks out there of coming to fruition. Yeah, we've lived through many hot wars, not to trivialize, of course, what's going on there. A trade war, inflation, but yet markets seem to be doing okay and sleeping well at night.
I think it's just this whole narrative that the Fed is leaning more dovish, right? I think Stephen Myron being confirmed and getting this kind of fast track within the Senate and approving that sort of position in the Fed board is certainly one sort of maybe trigger behind that, right? And whether he's going to, be that proponent of lower rates, right? I mean, we talk about where the dots are going to be. I think the consensus is we're going to see a 25 basis point cut this week, but he might bring up the 50 basis point case, right? And that certainly could, tilt the balance a little bit more if, in fact, he becomes a permanent voting member, of course.
Yeah. Can you imagine if they went 50 and then Jay Powell then had to justify that the 50 was the one and done?
The press briefing.
It's probably the most hawkish 50 basis point cut on record. But yeah, these are many, many things that markets have seemed to just wrap their heads around properly already.
Yeah.
As far as major risks over the short term are not concerned. The other thing, of course, is the good news we're getting out of trade, right? TikTok, and who would have imagined that the coming Friday, and we just got news of that, of course, out of the U.S. president, of this big deal that he and Chinese president will be speaking about going into the weekend.
Yeah, that's after we hear that there's a framework at least in place when it comes to some sort of TikTok deal. They were getting close to this sort of deadline. So does this kind of just kick the can down the road in some ways? I mean, what can we get in terms of the framework, and what does this all mean for an actual deal? But, as you mentioned about, what could be coming, right? I mean, November 10th, we still remember that's when that trade truce between the U.S. and China expires again.
Yeah.
Right? So there are still some hurdles in the whole trade discussion that we don't really talk about of late. Right now it's about Fed and good news from Madrid.
Measuring progress on trade negotiations as well, right? And to what extent can we actually measure, put a measure on the, whether that we're moving the needle as far as that's concerned, right? So you do have, of course, President Trump, as we were just mentioning there, says that he will be speaking with Chinese President Xi Jinping on Friday about what he calls, we just talked about, this big deal. Now, he spoke after officials from both countries, they met, of course, in Madrid, reached a framework deal in keeping TikTok alive in the United States.
It's important, and it can maybe even bring us closer to China.
Joining us now is Anna Ashton, founder at Ashton Analytics. Anna, I'll start with just really what we heard from TikTok. It's right now the readouts say certain things, but it's still a little bit vague about what came through. But is there any sort of indication that what we're seeing and this framework is going to stick when it comes to TikTok?
Yvonne, I think it's a little bit too early to tell. It's certainly, there have been indications from the president, from Treasury Secretary Scott Bessent, from U.S. Trade Representative Jameson Greer, that there is going to be this call between Trump and President Xi on Friday, and that perhaps they could finalize or formalize in some way this deal that the two sides have tentatively reached as soon as the end of this week. But we really haven't gotten confirmation of that from Beijing yet. Li Chonggong, the vice commerce minister, did the major press readout for the Chinese side after the talks in Madrid. And, he was much more sort of circumspect about what was coming. There was no indication from the Chinese side that there is, in fact, a call that's going to happen, much less that the deal is that close to being done. Li Chonggong seemed to be indicating that, there were numerous steps still to be taken, and that all of this would have to go through both countries' regulatory apparatuses and be approved in various ways before it was finalized. So it's wait and see.
Yeah, and I think we have Anna David here. So I think we have about, let's call it 4, maybe 5 weeks at best before, of course, we start talking about the deadline expiring. And that also just happens to be when ASEAN is taking place, APEC, and a lot of people are looking at those options as potential meeting points physically for both presidents. Are we any closer to a deal, though, at this point in time? After what? I think they've met 4 times already.
To a trade deal? The last time that they met in Stockholm in July, the readouts were not really particularly focused on either tariffs, the U.S. tariffs, or on rare earths and magnets export restrictions that China has put on. And those are the 2 key issues that have brought both sides to the table. Those are the issues that continue behind the scenes to drive these negotiations. But we haven't heard anything more than ambiguous about progress. We know that China is allowing more shipments of rare earths and magnets to the U.S. than was the case in May, considerably more, not as much as prior to putting these export licensing requirements in place. And we know that the tariff base rates continue to be temporarily low. That's going to continue at least through November 10th. But there are a lot of other contextual factors that make this really hard to predict. One of them is that a federal appeals court recently ruled that the tariffs in question, the Liberation Day tariffs and the fentanyl tariffs that the Trump administration has imposed on China, which invoked the International Emergency Economic Powers Act, were not properly imposed, that the president can't impose tariffs under that act, IEPA. The Supreme Court has agreed to expedite a hearing. We could get a ruling as early as December or early next year. And if the ruling is adverse to the administration, then they could have to pay back a lot of these tariffs that have already been paid. So it's in their best interest to keep the pause in place for now. And that also means that their negotiating leverage is kind of at a nadir right now, which makes it hard to move forward on that.
And to add to that is what we're seeing when it comes to NVIDIA and what regulators in China just said overnight about how they violated anti-monopoly laws in this certain takeover of a company. So what does this mean for companies like NVIDIA that are looking to try to at least re-enter into the Chinese market?
Unfortunately, I just think that the climate is highly politicized, Yvonne, and the president allowed or gave the green light for NVIDIA to start exporting its H2O chips to China. And then since then, China has taken a variety of steps to sort of discourage purchases of those chips. And now, it's a real question whether or not those sales can really move forward. And I think one of the likely reasons that we have to consider is that President Trump himself made clear that, the deal was one where NVIDIA could export, and in exchange, the U.S. government would take a cut of the profits. And I think Beijing is basically signaling that those profits only get delivered at Beijing's, if Beijing decides to allow it.
Anna, the notion that China has, stronger leverage in these negotiations compared to sort of the other counterparts that the U.S. is dealing with right now. I mean, we talk about India, Japan, Europe, the U.K. And, I wonder whether it could be in China's interests, at least relatively to Donald Trump in the U.S., to push back any sort of deadline, that China will be okay and the U.S. won't be. Just your thoughts on that notion.
It's an interesting proposal, and it may be in China's interest to allow the deadline to continue to sort of linger out there. I mean, certainly, I can't see it being super beneficial for either side to deal with the IEEPA tariffs as a major negotiating point right now, when there's so much question around the future of those tariffs, because you don't want to hang your side of the bargain on something that the other side may not have to promise, or vice versa. So yeah, it may be appropriate for the Chinese side to sort of drag this out.
Anna, we haven't talked about secondary sanctions. The fact that the U.S. has been pressing the likes of India on 50% tariffs because, and partly because of their purchasing of Russian oil. Trump has mentioned he might do the same and follow suit when it comes to China, but then of course there's some contingency. Europe has to pull the trigger as well. How likely do you think that scenario would be?
I think it's pretty unlikely in the near term, Yvonne. I mean, I think it's clear to the White House that the threat of secondary sanctions, or secondary tariffs, really, is the biggest threat. Is something that could prompt China to stop buying so much oil from Russia, and having fewer of those purchases would make it much harder for Russia to fund its ongoing war in Ukraine. So that is theoretically leverage that the U.S. could use to try to force an end to the conflict, but it's theoretical. And the challenge is, number one, China's not going to stop buying oil from Russia. They've been incredibly clear about that. This is a matter of sovereignty for them, their right to do business with trading partners, irrespective of what a country like the U.S. wants to do with those trading partners. And I don't think there's any flexibility for them.
Anna, thank you so much. Anna Ashton, they're founder of Ashton Analytics. They're on the conversations around where we go here as far as the trade conversation goes. Okay, just very briefly before we head into the break, just notice that the dollar has weakened even ever so slightly, even further going into the thick of the Tuesday session. On my right side of the screens is the Bloomberg Dollar Index, takes you back to about mid-July, and we are almost back to mid-July. So let's call it 7-week low on the Bloomberg Dollar Index. A conversation on fixed income yields and everything in between coming up next with Ping An Asset Management. All right, let's have a look at treasuries. Okay, well, certainly a lot less treasure in treasuries recently, especially in the long end. But yeah, that's a separate conversation. So we've been waiting for the 4% handle to give on the 10-year yield. Certainly the last 2 weeks has been more about flattening than steepening, but certainly the 2 months before that has been more about steepening. Big move as well coming through as well on JGB futures. Right. Is this simply repositioning, squaring off positions ahead of this Fed meeting that's coming up, consequential one, what it means for Fed policy, even moving forward? Let's bring in our next guest, Gordon Tsui, Managing Director and Head of Fixed Income at Ping An of China Asset Management here in Hong Kong. Gordon, very nice to see you.
Great to be here. Thank you.
The million-dollar question is: markets think they're going to do 3 cuts before Christmas.
I think so.
Do you think Jay Powell will endorse 3 cuts? And why?
Basically, Powell is marking to market on the interest rate cut numbers. And according to the WIRP on Bloomberg, right? In fact, it is nearly 100% chance of 25 basis point this week. And in fact, only a slight chance of 50 basis point.
Yep.
Personally, I do not think so. I do not think the Fed will cut 50 basis points because nobody in the market is expecting this outsized cut. And indeed, I think right now the sentiment for the Fed officials is trying to, be accommodative, doing what the administration wants to do without hurting the credibility of the Fed. I think this is the the ultimate goal of the Fed officials.
Yeah, I think I'm not sure if you saw this. The CME actually put out a statement mentioned early on. I think there was a massive, a record block trade in Fed fund futures that took place. Let me just square that easily for our viewers here. And the simple interpretation of that was there's possibly a case to hedge against a possible 50 basis point cut. Do you think it's worth hedging in that direction in case they go big today?
I have to admit
Not today, sorry, this week, sorry.
Back in late July, 2 days before the big non-farm payroll, disappointment. In fact, I was on a podcast, a global podcast, done by a paid credit research company. It's on my LinkedIn. In fact, at that time, I proceeded that in August, all the big decision makers in the buy side, in the fast money, they will be on holiday. So right now, the paying trade is for these guys to catch up on the duration game. So in fact, I warned my own PMs back in July, try to get as much duration as possible, both in credit spread as well as interest rate duration. Now the big guys are catching up.
It's made Treasuries the #1 sovereign sort of bond market this year on this sort of new Fed easing. So you still think Treasuries can outperform?
I think so. Right now, the 2-year 3.5%, in the benchmark, I think it is quite the right, position in the medium to short end. But for the long end, in fact, if you look at the 2-year, 30-year, it's more than 100 basis point spread. In fact, if you look back, maybe 1 or 2 years ago, it can be negative. So how come this kind of steepening trade that has been so prevalent after Trump, got nominated? In fact, this can ease back if the inflation numbers are not as, fearful as people believe.
Is that how convinced are you over that call of inflation? Because a lot of people would disagree with it and say there's not enough information to conclude inflation will be much lower this time next year.
That's right. A geopolitical research we subscribed earlier this year termed Trump as the human steepener. Because
I'd love that on a T-shirt, but yes. Yeah.
And because the campaign promise by Trump, if that all got materialized, it will push the fiscal deficit to as high as 9.7%, round it up to 10%.
Okay.
And that will be a nightmare for us, the bond vigilantes. But if you look at the OBBBA, apparently it seems to still boost up the 10-year, deficit in total by about 4 trillion. But if you look at the tariff income, it is humongous.
Yeah.
It is actually bringing in a lot of revenue, maybe 400 billion per year. It can actually help alleviate a lot of fiscal burden. So for us, we only look at whether the SOTUS, the Supreme Court, whether they will mess up with the tariff income. If it is still smooth, getting all this to rebalance U.S. trade deficits away from this kind of drastic scenario, bringing in all the tariff income, I think it's very healthy.
What about, the slide of the dollar, right? I think if you were a dollar-based investor, going offshore and outside the U.S. was probably the better trade, right? What do I do about this whole de-dollarization theme now?
Frankly, I think Trump is making America's manufacturing great again because a weaker dollar obviously will help the competitiveness of the U.S. But it will also help the world, rebalance away from the U.S.-centric economy. for example, China, now it is going to boost a lot of its own consumption. The great rebalancing will be the theme in the coming decade.
Okay, so steepeners would be a way to go, one way to go.
Yeah.
Duration, go up in duration. What else is the best? What else is the most appropriate fixed income strategy at this point?
Combining the, obviously, weaker dollar, and then for the duration play, extend it, because it will be kind of...
How much to extend it? What are you telling your PMs now?
Definitely, I think right now the sweet spot is 30 years. If you look at the auction...
All the way to 30? Okay.
Yeah.
Okay.
After all, I think it will become a scarcity trade, especially for insurance companies like us, because we are not looking about 12-month scenario. Right. Okay. 3 to 5 years. I think the logic is that right now, people are expecting that the fiscal burden, it is still a legacy of the pandemic days. But it is not. In fact, during the Biden administration, the fiscal deficit was funded by QE and money printing and excessively low Fed funds. But now, in fact, the fiscal deficit, manageable 6%, and then all this tariff income as well as more investment back to U.S., I think the economic picture is very healthy. Even, some people are talking about that the U.S. home equity, in the single-family home, it is as much as $35 trillion. So the U.S. economy right now is kind of a cash-driven kind of growth. But if we're slowly moving up to, mobilizing this kind of home equity in the housing market, they are so wealthy, for the middle class Americans.
Especially when you're seeing Japan, I take up parts of Europe like France and UK. I mean, there's just a barrage of bad news. So in terms of developed markets, does that make even the case for the U.S. a bit more attractive, relatively speaking?
Relatively speaking, yes.
Yeah.
After all, I think the two axes of the world, China and U.S., will be the main focus of investors.
Okay.
For U.S., obviously, they have all this AI, all of these, strong fundamentals. While in China, we can, leverage on our consumption, letting the, middle-class Chinese families reduce their precautionary savings for pensions, for medical care, and use it in consumption. If you look at, maybe 2 weeks later in the Golden Week holiday, National Day holiday, I think there will be loss of
consumption
from mainland.
All right, we'll look forward to it. Gordon, thank you. Gordon Tsui there, Managing Director and Head of Fixed Income at Ping An of China Asset Management. We got plenty more ahead. This is Bloomberg.
Welcome back. Just one stock to tell you about, a bit of a throwback here. Developer Kaisa is up 25% on really progress that they've filed, that they've made in a statement here in terms of debt restructuring, and certainly any good news is going to lead you to, and really the call from many analysts recently, alpha is in this developers. Plenty more ahead. This is Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets are heading to the lunch break, and we are actually seeing Asian stocks doing quite well here today. We've still been flirting with that record, right? So we'll see. Nikkei is up about a third of 1%. Topix is up about 13 points. Yen's a little bit stronger here this morning at 147.22.
Yeah, you got to wonder, this growing chorus of sell on the Fed news might actually be correct, turn out to be correct. Just looking at the price move right now, right? I mean, how much room there is there for disappointment in this market? Maybe they're seeing something we don't. We're only journalists here. We can only see, all we do is write headlines, really, and try and figure out, are stocks up or down because of what? Stocks across the region, 221.57 on the benchmark. S&P futures are Top 6,600, of course, was the story overnight. Almost every single sector is to the upside. I think the only market in the Asia Pacific that has yet to hit an all-time high, major market, is India.
Yeah.
And I think we're close on that too, like 3-4%. But yeah, I mean, that market opens up later. But yeah, back to the here now, because lots of good stories right now here in the Hong Kong market.
And where are we now in this whole liquidity-driven rally in China, right? And are we going to see Hong Kong and those H shares catch up after lagging their mainland peers? Obviously, we've been talking about the cheaper valuations here, higher tech exposure, which could bring a lot of investors back. Bloomberg Intelligence also thinks that Alibaba chip, might make it the new face of China's AI ambitions. Let's bring in our team. Asia Equities reporter Winnie Xu joining us now, along with Bloomberg Intelligence equity and strategy analyst Marvin Chen. Winnie, I'll start with you. So tell us a little bit more of the drivers for A and H shares now.
Yeah, it's a very interesting trend that we're seeing here right now, right? When you take a look at the monthly gains, this month HSCI is about 5% up versus CSI, just about 1%. And that gap is the biggest since February, where we saw that DeepSeek optimism coming out. So lots of drivers here. We talked about the valuation, H shares being cheaper. And also, when you look at the technical side of things, the CSI 300, the onshore stocks are still looking a little bit more overheated versus the H shares. And from the earnings perspective, actually, when we talked to JPMorgan, they were talking about how the expectations of the CSI 300 earnings was really high coming into this year. But when we look at the second quarter earnings, actually quite some disappointment there. So there's going to be more downside that we might be able to see for the onshore markets. But when you take a step back and look at the more macro side of things, H shares a bit less sensitive to tariffs and also will benefit more from the Fed's easing. And that's what we heard from when we talked to Bank of America and Citi. And when you think about kind of the fund flow side of things, right? H shares, we are talking about 12 consecutive sessions of southbound inflow. So mainland investors' interest still remain very strong. And foreign investors obviously love H shares because of the exposure to the tech names. Yeah. And we talked about how Alibaba has just that series of good news over the past week. So that was also a very strong driver there. Yeah, I mean, the Alibaba chip, the DeepSeek moment. Marvin, I'll bring you in here. Is the case as clear-cut there as far as H shares goes? Over 8, relatively speaking.
Yeah, I think Winnie brought up many good points. The Fed easing should improve offshore liquidity in the market. Also, the exposure to big tech names. If we look at our, China sentiment indicator, it is hovering in the exuberance zone, and this has typically been associated with negative forward returns for the CSI 300. Okay. Many of the near-term indicators, such as the turnover, margin balances, are in overheated territory. So we should see some near-term rotation into the H shares. Yeah, and certainly big tech driving a lot of the H share movement and price action. What about when it comes to Alibaba? Everyone's talking about this progress around AI chips. Is this another DeepSeek moment, you think? Yeah, I mean, I think like DeepSeek, it represents that China is making progress in closing the gap with the U.S. in terms of AI development and doing so with more self-reliance. So, it does make sense that the valuation gap that has widened since 2023 because of AI is now narrowing. Also, if you look at China's AI development, it is still at early stages compared to the U.S., so there is still room for growth potential. And now with this chip progress, markets are growing more confident that any challenges that NVIDIA faces in the China market is now a catalyst for China's homegrown AI instead of like a negative as before.
I need to circle back, Marvin, to the this question that still lingers, but lingered a few weeks back. This divergence between the stock market and the economy. Yeah. And I wonder, are you concerned over valuations, or at least the earnings outlook? Do you think the earnings will come?
Yeah, I mean, markets are always forward-looking. So I think even though the macro data is bad, there is expectations that China will do more in terms of policy support. And the good news is that, with the Fed interest rate cut upcoming, this should open room for, more China domestic easing. So, last time the Fed cut rates is when we saw the bazooka-style stimulus in late 2024. We don't expect that we will see it this time around, but we do expect more easing ahead. Yeah.
We were talking a little bit more about these cross-border financing rules that were eased, which is new. Tell us what this means for markets.
Yeah, I think actually to Marvin's point, it is part of that the government's support kind of helping on the economic side of things, although this time it's more on the property side of things. But, overall, we saw that series of weak data that came in yesterday as well. So it points to how important and necessary it is for the government to step up with more stimulus and how urgent that is if they want to hit that 5% growth target by end of the year. And yes, we've seen some effort coming in on the more domestic investor side of things when it comes to supporting the property market. But also right now, this time around, it's more focused on attracting the foreign inflows and foreign capital. And it's actually a pretty good timing when you think about how we have a market rally in equities and also the yuan is also strengthening. So foreign investors' money are tiptoeing back to the market is what we're seeing. We've seen that through, for example, the U.S.-listed China ETFs, the iShares, the MSCI iShares. They were seeing the strongest monthly inflow since May. And also when we talked to our buy-side investors, they were saying that investors are more willing to put more money into Chinese assets as part of the diversification. So, that foreign sentiment right now is quite positive for Chinese assets, and it's good timing then for the government to kind of push for whether it's the support for property market or for innovation.
This debate since that big bazooka moment last year on what's changed in this Chinese market, right? It's easier to see the bull case now than it was back then. And I wonder if we're ignoring some risks in your view. What are the risks to watch here to this rally?
Yeah, I think some risks may be that the rally may be too fast for comfort for policymakers. As you say, it's kind of disconnected from the economic reality. We had some discussions about policymakers and regulators kind of stemming this surge in momentum and aiming for a more slow kind of rise. I think the other risk is obviously, of course, the tariffs also. We still haven't seen the majority of the impact kind of play out. We expect to see some of that in the second half of the year. Not necessarily for China, but also the impact on the U.S. as well. Obviously, if the U.S. is not doing well, the global will not be in a good position also.
Team, fantastic. Thank you so much. That was Marvin Chen there out of Bloomberg Intelligence, our analyst, and of course Winnie Xu, of course, our Asia equities reporter. And this goes into another thing to look forward to, possibly another catalyst around this time tomorrow, this briefing on China expanding services consumption, being able to support the services.
Yeah, we've seen certainly different facets of the consumption sort of stimulus, whether it's helping with childcare and the like, and now we're talking more about services, which is a little bit of uncharted territory from policymakers as well. Coming up, of course, we're going to be live at the Super Return Asia in Singapore, speaking with AZVC managing partner and former senior PayPal exec, Jack Selby. Now, also hear from VC investor Jeep Klein, founder and managing partner of Raisewell Ventures. That's also ahead on Insight with Haslinda Amin. This is Bloomberg. We are checking Hesai shares here this morning, the world's largest maker of LiDAR sensors used in self-driving hardware. And there you go, 8% pop here in Hong Kong today. We spoke with the co-founder and CEO David Li right after that listing at the Hong Kong Exchange as competition in the EV space heats up.
The key is innovation, right? The wrong way to do that is to continue to lower your price without the ability to lower your cost. So for us, we've been trying to develop proprietary components since almost the very beginning. Since 2017, we've developed 4 generations of platform technologies on integrated components with one goal, which is to continue to lower the cost. That's why even though the price war it continues, even though everybody is fighting very competitively, we have an edge, not because we can afford to lose more money, it's because we invested so much already upfront in being able to lower the cost down the road.
How confident are you, though, that the officials and regulators, MIT and others, can stop this race to the bottom and that a healthier auto industry will emerge? There might be a shakeout. Some of these main players that you have 100% contracts with, like Li Auto and others, there might be some consolidation. What's your outlook, and how does that directly impact you?
I feel like what the government is trying to do isn't stopping the race, is trying to hold a standard for the industry so that everybody can compete fairly without sacrificing safety, which is super important for us. If you think about it again, we make safety parts. We want to make sure everybody has the same set of metrics to evaluate their safety, which is now happening with the new draft of the GB. The government is essentially saying that, look, it's a bad idea when everyone just can claim they're level 2. Right. Why don't we set a few scenarios that you really have to pass those scenarios to claim level 2 ADAS, which is extremely helpful to hold the bar high. And for us, it's further important because those scenarios cover many, many cases that require LiDAR to be safe enough.
So how much of these proceeds are going to go into the R&D to get to your latest, AT128 version chip for level 3 autonomy by next year?
A significant part is going to the R&D, and we'll continue to invest. It's not going to be 1 year, but we raise money to be able to continue to invest in the innovation, in the integrated components, in the in-house manufacturing, in expanding our manufacturing to outside China to serve our customers overseas. So in the end, with one goal is to bring that to everyone, including everyone outside China.
Overseas is critical, right? Because you have a Toyota partnership, you have a major partnership with an unnamed OEM in
Somebody
Europe.
really famous?
You have a factory being built right now in Southeast Asia. Everyone's excited here in the Hong Kong Stock Exchange. You haven't named that country. It's widely believed to be Malaysia, but we won't go down that road again. But how important is that international market? Because there's another announcement, that $40 million partnership with an unnamed, again, you're kind of secretive, unnamed robo-taxi company in the United States.
The customers always like to be secretive until they actually roll out to the full fleet or the vehicle. So we respect the culture, and we obviously follow our agreement by not announcing their actual name. But that's not important. What's important is that we're seeing the almost like explosion of adaptation for such a technology. China, of course, is first, and the rest of the world. Robotaxi, from the very beginning, now finally we're seeing sizable fleet with robotaxi on the road.
Can you make inroads in the United States? Because this partnership in the United States is with a U.S. robotaxi company. I'm betting a lot of money that it's not Tesla, because they're the vision. They don't like LiDAR. Elon Musk doesn't like LiDAR. But again, Waymo and others do.
Yeah. I won't be able to comment on the name, but I do want to point out even Waymo, which is one of the almost most advanced player in this domain, argued publicly that LiDAR is absolutely necessary. It gives you a great margin of safety, and it doesn't make sense for people not to consider that. Historically, it might, because it's too expensive, and we don't have enough data to know whether it's useful or not. Let me give you one example. It's almost like somebody will tell you, I don't think coffee helps me because I never drink coffee, regardless what other people think of coffee. Right now, everyone likes coffee.
Well, we need coffee. You know who?
Always.
You know who else needs coffee? Our deals team, given everything that's taking place and how busy they are. Maybe we're hiring. We don't know. Anyway, the Hesai listing, David Li there, of course, with Stephen Engel, certainly comes as Hong Kong bankers also need some coffee, likely here. Ending this summer relative low with a massive bang, billions of dollars of deals here. Let's bring in Julia Fioretti, our Asia Equity Capital Markets reporter, who's hopefully had some coffee already. Why has the market been so busy again?
It's a continuation of the things that we've spoken about previously. Basically, the market is doing extremely well. The Hang Seng is up more than 30% this year. So obviously, investor confidence is back. Investors are buying these deals and they're doing well, and that basically begets more deals. There's a lot of the companies that are coming to market are companies that investors want exposure to, be it in tech, because they want to bet on the next winner in the AI race between China and the US. They're companies that are leaders in their sectors, and all this has basically contributed to the deals boom that we're having, especially after the years of a very sort of lackluster market.
Yes. Tell us what's coming up next in terms of the deal front. I mean, everyone's talking about Zijin Gold. What else is your team looking at?
In terms of IPOs, definitely that's probably one of the biggest. It's coming up. It's gauging investor interest now. It's meeting investors this week, so we're expecting it to launch quite shortly. There's also the car maker Chery. That's also expected to be a large deal, over $1 billion. And then there are obviously a number of China-listed companies that are listing in Hong Kong. That's been a continuation of the trend that we've seen. There was cattle earlier in the year, and there are many more, and those are also mostly large deals, several $1 billion. One of them is Luxshare, Sany Heavy. The list goes on. There's really a lot of them, and if the market holds as people are expecting it to, then it's likely to be a very busy autumn.
Well, are people expecting it to? Like, based on the people that you talk to, your network in the industry, you get a sense that this is a period that will last?
That's the million-dollar question. No one has the full answer, obviously, but obviously people are expecting it to last at least until the end of the year, barring any black swan events. In terms of whether it'll go on after that, the expectations are that it will. Obviously, people are still a little bit cautious in terms of saying whether it'll be the first quarter, the second quarter, or the full year, or maybe this is a boom for years to come. That's very hard to predict. They tend to be wrong often if you make a very firm prediction. And there's still a lot of uncertainties. It's still a very volatile environment. So for now, people are rushing to the market whilst they can, whilst the market is hot and there's demand.
Julia, thank you, Julia Ferretti there, our Asia Equity Capital Markets reporter, joining us there on what to expect in terms of the IPO pipeline as well. Of course, you can get the Insider's Guide to the Money and People Shaking Up the Finance Hub in our Hong Kong edition newsletter that's out every Thursday. You can sign up through the website, Bloomberg.com/newsletters. Plenty more ahead. This is Bloomberg. Some top corporate stories that we're tracking for you today. China's foreign exchange regulator has streamlined the country's cross-border investment and financing rules. In a renewed effort to deepen market reforms and attract overseas capital, the regulator is easing restrictions on the use of foreign exchange for property purchases. Registration requirements for preliminary expenses and reinvestments have also been scrapped. Elon Musk has responded to his massive pay proposal from Tesla's board by buying about $1 billion worth of shares and setting the stock into positive territory for the year. He made the purchase through a revocable trust on September 12, signaling confidence in Tesla's future. Musk's trillion-dollar compensation plan includes an incentive if the company hits a $400 billion adjusted earnings target by 2035. JPMorgan will cut the weight of the largest bond issuers in its flagship emerging markets index. According to a client note seen by Bloomberg, the bank will gradually lower the issuer cap on its GBI-EM Global Diversified Index in the first half of 2026. The move will affect sellers in markets such as China and India, while Brazil and Thailand look set to benefit. Bloomberg also offers index products for various asset classes through Bloomberg Index Services. Tencent has begun marketing its first bond sale in 4 years. The firm is said to be looking to sell 5, 10, and 30-year offshore yuan-denominated notes with initial price guidance at 2.6%, 3% and 3.6% areas. Now, a source says the deal could be priced as early as today. This would be Tencent's first sale of dim sum notes and its first bond offering in any currency since April 2021.
Well, speaking of fundraising, here's a interesting one. So we're looking at shares of, not Tencent, GCL is coming up on your screens very, very shortly. So the company raising decent amount of money. What's interesting as well is single buyer there as far as the company is concerned. Let me just bring up some of the details here. Okay, so GCL Tech, we're looking at just under $5.5 billion. That's Hong Kong dollars. Translates to about just over 700 million. That's US dollars. The buyer, Infinity Capital Global. There we go. That's about 14% of issued share capital. That's the cash call, of course, based on this filing that I believe was this morning into the exchange. 2.4%. You can look at the exchange and the filing if you want to get a sense of where the proceeds are going to. The majority will be used for establishing a capital reserve, though, for the reform of the supply side to promote structural adjustment. Okay, it's very, very long. TikTok-related shares, I think we talked about TikTok at length already today. Good news there. Good news for the stocks, related stocks. In the onshore market, after this sort of framework was established, that takes us into maybe some momentum going into the Friday conversation per U.S. President Donald Trump that he will be having with Chinese President Xi Jinping. We're still staying on the tech space, but looking at chips, generally speaking, of course, on the back of this bounce back in NVIDIA overnight following the, right at about the close on Monday, news, of course, of China looking at NVIDIA, and then you had the pre-markets weakness into the close descent, and we are still feeling the tailwinds as far as that's concerned. 5.6% to the upside. SK Hynix business, absolute tear. I mean, that one's just simply gone vertical, really. You look at the chart. Speaking of accelerator chips also in focus on the back of what's Long Sun GPU progress. Okay, I got to look at that story today. But yeah, well, that's the story.
More chip progress,
there
basically, in China. Yeah, I mean, it leads to a lot of discussions, right, about what we're seeing in the Hang Seng here today and whether we're going to see that catch up offshore once again, given all the spotlight has been really on A shares of late, right? We talk about valuations, we talk about the whole tech theme that might be sort of the next sort of leg up, but really right now we're seeing the Hang Seng down about 0.25%. In terms of what downside risk we could watch out for, right? We talk about this Fed meeting. I think some say, if we see that the dots for next year, not so much this year, next year don't change, that could be a risk. If Powell pushes back on market pricing, also could be a big risk as well. So two things to actually watch, I think, in that Fed meeting. Yeah, I mean,
Gordon Tsui out of Ping An joined us early on. To him, it's very clear cut. In fact, it's almost non-consensus. So he thinks go up in duration. Yeah. He thinks the Fed will mark to market and meet where the market expectations are. So you think, since July, he said, go long in duration, still go long in duration, to that very, very point. That's it from us. We'll see you all tomorrow.